You're tuned in to Market Pulse. Joining me now on the show is Research and Insights Associate at Nairmetrics, Samuel Oyekomi. Good afternoon.
Good afternoon, Joanna. Thanks for having me.
All right. So we're going to get into it. We're going to begin with Kenya. There's quite the stir there in Kenya. And we're looking at how that stir is affecting the financial markets, right? So looking at the first half in 2024, the Kenyan shilling, we know that they emerged the best performing currency worldwide. While bond markets turnover doubled, the Nairobi Stock Exchange also posted an impressive 50.4% growth in dollar returns, with the stock markets rallying as well. But despite President Ruto's attempt to quell the unrest, we saw protests on Tuesday as well. Business activities in various parts of Kenya, of course, have come to a standstill as a result of those protests. With these demonstrations taking to the streets and the protests as well, what impact do you see this reemergence of protests having on the financial markets? And do you see the gains achieved in H1 2024 being undone, H2? Samo? Oh dear. All right.
Ideally, one would expect that social unrest in any economy could have an impact on the financial market, be it the fixed income market, the equities market, or currencies, as the case may be. But in this case, I think it's quite dicey because it's not so direct. Because if there's anything that we've learned, especially from an African point of view, some of these social unrest, they tend to not have so much severe impact on the financial markets. But of course, it has a tendency to do that if it drags for long. So if this protest and halting business activities drags for so long, we might see that having to have some ripple effect on the financial market. But what I think that we in the emerging developing markets might want to consider is the fact that what happens in developed economies like the US, the time by which the Fed, for example, starts cutting rates, I think that is also going to have an impact on emerging markets, frontier markets like the African, of course, like the Kenyan market. So I think that is going to play a significant role. So two things. One, if this protest sustains for too long, and then what happens in the developed markets like that of the US, if they start cutting rates, of course, foreign investors start looking for other markets where they have some form of appealing yields to put in their money. But of course, downsides for Kenya is that their credit ratings has also been dropped by Moody's.
I mean, hopefully we're able to get more from Samuel Oyekomi there, and network strengthens. But yes, we are seeing markets, as he has said, respond to what's happening in the US and projected rate cuts for September in the US. So we'll see how markets react to that as well. All right, Samuel, are you there now?
Yes, I am. Thanks.
All right. We lost you there for a second. But I mean, you did make a point that, we should, look at what's happening in the US more and how that could affect us. That perhaps may have a stronger effect as compared to some of the unrest that we're seeing within emerging markets here in Africa. Let's come now, to these rate cuts, but here in Africa. On Thursday, the Central Bank of Egypt, their Monetary Policy Committee, they agreed to maintain interest rates for the second consecutive meeting. South Africa's central bank also kept its main interest rates unchanged at 8.25% in a decision that was announced just yesterday. This coming Monday, Nigeria's central bank will be holding its MPC meeting. Do you see the CBN perhaps mirroring, these decisions to hold rates and allow businesses recover from 12 consecutive interest rate hikes over the last 2 years?
Well, so when you look at the examples of Egypt and South Africa, I don't think we're really in similar situations. So if you look at South Africa, we've seen their inflation rates might have taken by a bit, even it was just slightly. In May, it was, I think, 5.2%, more or less what was recorded in April. And Egypt had recorded like about 5 consecutive months of inflation decline. But of course, in Nigeria, we've been battling with recurrent and persistent rise in inflation right now at about 34.19%, trailing over 28-year high. And from the CBN and CBN governor is that interest rate will continue to increase in as much as inflation remains unabated, and that's what we're currently saying. Before now, one would have expected that the CBN would keep interest rates currently at current levels as a result of the decline that we're seeing in month-on-month inflation. But this last June, inflation result that was released, month-on-month inflation increased, which might want to more or less waive some of the mindset that suggests that maybe we have gotten to the peak of inflation and we'll start plateauing. But right now, really can't say. I would expect some form of increase, but not so much, really about 50 basis points or 25 basis points. But I think the CBN will still want to continue reining on inflation, and what best ways would they adopt if not to increase the monetary policy rate?
All right, I guess we're going to have to wait and see the 296th MPC meeting, 22nd of this month, next week, Monday. We'll be tracking that right here on Market Pulse. Let's come to other decisions that the CBN has been making and other moves they've been making. We've seen infusion of discounted dollars into the markets through BDCs, all in a bid to tame the Naira. Looking at where the Naira is today, how effective would you say that this method has been and will be? Is the stability of the Naira now pinned to sustained dollar sales by the CBN?
Yeah, it's quite obvious that we're not really seeing a lot of positives from these policies. The intermittent interventions by selling dollars at discount rates to either BDCs or some other market players, we don't seem to see that having any positive impact, because right now we're trading 1,600. It used to be around 1,003, 1,004 when the CBN resumed BDC sales some months back. So I think the CBN will need to have to probably look at their more strategies and come up with some more strategies to be able to curb the persistent depreciation of the exchange rate, because right now at 1.6, it is now difficult for even an analyst to predict where the real value of the Naira is. But of course, you might want to look at many other macro.
All right, we may have
that impact. We don't have time for school fees for those who are still it's about our time. So of course, a lot of things happen, but right now the CBN really need to do more.
Yeah, they do need to do more from what you have said. And again, from what you said earlier about, looking at what's happening in, advanced market like the US and, the possibilities of a stronger dollar, do you see that also affecting the Naira here? And, is there anything we can do about that?
Yeah, but by all means, that also has a significant impact, because if the dollar is going stronger, FX players, foreign investors who had initially entered the Nigerian market sees that as an opportunity to repatriate and invest in FX-denominated assets for them, which is good, because they don't stand the risk of FX devaluation and whatnot that you might likely face when you invest in an economy like Nigeria or any other frontier or developing economies in Africa. So yeah, that plays a significant role, and that's why it seems like the whole world is looking at the US, looking at the elections and the manifestos and whatnot of the presidential candidates, because it seems like that's going to have a significant impact on where the world is going to be moving to into 2025.
Indeed, and strong players in the running. Thank you so much for your market insights and for joining me here, Samuel Akomi, Research and Insights Associate at Nairametrics. Thank you once again. Up next, negotiations have stretched, strikes have been held, several strikes, but finally a conclusion on Nigeria's minimum wage. Did organized labor cut the right deal, right? David Olujinmi will be joining me, Olujinmi, I beg your pardon, will be joining me after the break to discuss this. You're watching Market Pulse right here on News Central in partnership with Nairmetrics. This is the part where you get to be an active participant on the show. A poll is up already on X at Nairmetrics, so head over there and cast your votes. If you already cast your vote, you already have an idea where the conversation is going on today's Spotlight. And if you haven't, let me fill you in. So yesterday, a new national minimum wage was agreed on in a meeting at the presidential villa. It has now been moved from 30,000 naira to 70,000 naira. Of course, it will have to be submitted to the National Assembly, and I believe that's happening on Tuesday and signed into law. But there's an agreement on ground. The deal includes a commitment to review the national minimum wage law every 3 years. We know that this is long overdue. The former minimum wage of 30,000 expired by law sometime in March. Organized labor doesn't seem mad about this, right? We saw them giving the bosas. Do they represent your sentiments on this matter? Let's have David Olujinmi, the financial markets analyst with Nairmetrics. He's with us now. It's been interesting to get your take. The NLC was demanding 250,000 naira. Is this a trade-off from, is there a trade-off here, right, from demanding 250,000 naira and they're saying that, if we're going to give you 250,000 naira, we're going to increase fuel prices, but if we give you 70,000 naira, we're not going to increase fuel prices, and we're going to review it in 3 years. Do you see the trade-off there, and what's your assessment on this?
So basically, the government, would I call it a trade-off? I don't know if I would call it a trade-off, because 250,000 was never sustainable. Was never sustainable in the real sense of it. So if we have a situation where we have a 250,000 minimum wage, we have to consider the inflationary push of this amount of money flowing in circulation. This is the part where CBN will now say, oh, there's a lot of money supply in society, and this is one of the reasons why inflation is at this level. 250,000 versus 70,000. It's not a trade-off in the sense. 70,000 seems more sustainable. However, there's something I was saying. I was saying something earlier today. I was talking about the fact that I feel like the government should have made this move from the beginning, from the get-go, when we had all these things, subsidy cuts, naira devaluation that were pushing inflation. Now we're at 34% inflation level. Now you're just increasing the minimum wage of a society. It's almost complementary. Minimum wage increases come with a certain level of hike in inflation because of increase in money supply. But now, I hope to see what will go on. The society is already used to what we've had. The country is already used to a situation where things have skyrocketed and people are just trying at all means to survive. But now we have a situation where money is going to come more into the hands of people. Are we going to see increase in the prices of goods and services? We never know.
All right. So yes, well, we'll see how that happens, how that pans out, at the end of the day. And, there are those who are asking, since you forfeited the 250,000 naira, and that would have come with an increased fuel price, does that mean we're not going to see fuel price hikes within the next 3 years, within which, before that renegotiation of the current minimum wage will happen? But let's move on from there. Minimum wage in dollar terms is the lowest it's been since as far back as 1981. Why is it important that we look at it in dollar terms, as many have been doing, and what does that comparison imply?
Looking at it in dollar terms is to give us a sense of where we are in regards to GDP. We are at a $43 minimum wage. We are at a $43 minimum wage before the hike of the currency. After the devaluation of the naira, I don't even know where our minimum wage went to. Went to probably $15 thereabouts. So we need to know, like, the reason why we have to do the currency comparison is because look at what happened to our currency, look at what happened to our GDP after the naira devaluation. Nigeria went from a almost $500 billion economy. Now we're about $253 billion. No matter how we want to push it and say our GDP is growing by 2%, 3%, no matter how you want to look at it, on the global stage, we have declined to number 4 in Africa and almost number 50 in the world. It shows that we are no longer that economy of, when you look at the figures, you look at 49 other countries that are bigger than ours in the world, and you say, okay, these are 49 other economies where I can do business better. and make more money. You look at the GNP of the country, you look at the money, the minimum wage automatically translates to the GNP of the economy. It shows that, okay, Nigerians don't have this amount of money to buy my product or to buy my service. This is not a good market for me. No matter what we do, we also have to remember that we are not isolated in the world. We are looking for investors.
All right, I mean, that's a valid point there. But what do you expect to be the consequences of a 70,000 naira minimum wage on both public and private sector?
On the public sector, I can say they would survive. They would always survive because they have capacity for. But one thing is, one thing that is coming to play at different times, which is my issue and is my contest with this administration, is the fact that a lot of things seem to be happening at the same time. There's no coordinated approach to policy making. So now, last week, we have a situation where the local government have been removed from, the allocations of the local government have been removed from states, right? Now, this week, we have 70,000 naira minimum wage. So how much is the local government going to pay minimum wage? You have a local government that receives 400 million every month. It has to sort out schools, primary healthcare centers, plus all the other responsibilities of local government. How much is going to be their, how much salary, what's the salary structure you're going to create for them? So a lot is happening at the same time.
Yeah, there's so many dynamics at play here, and that will eventually need to be, sorted out. And we'll see how this all pans out, right? It's a quite eventful period. So many things happening, but that gives us a lot to talk about here. The minimum wage, we know, has been increasing since 1981, but the country seems to be, struggling, right, to hold other factors constant that make and give, the money some sort of meaning. What more needs to be done to ensure that we're not back at the table having to have this conversation and negotiate a new minimum wage, let's say, a couple of years or, months from now even?
So what needs to be done is I would speak to what one of the contestants in the presidential election said. We need to start a wage system where where productivity is the factor, where productivity is the constant. I don't know if you get me. Let us start a pay per hour system, a pay per hour wage system, where people know that, okay, they can work this amount of hours and make this amount of money. And it helps to drive a society that is more productive, honestly, because we'll have people who know that when I can work from this time to this time, I can make this and this amount of money. We have a more productive system. We have a better tax-paying system. I'm hoping to see what the government will come about with the tax reforms committee, and how they fit into the plan. But we need to have a more productive society, a society where there's better tax paying, and most of all, a society without kleptomaniacs, like Selitani Aliudume said. We need to have a society where politicians use the resources of the land for the people of the land.
So productivity, pretty much, with whatever increases we see, whether in the budget or when it comes to wages.
Yes.
Hopefully we do see that happen.
Especially in the budget.
Thank you. Thank you so much, David, for that breakdown. This story isn't yet over, and we'll keep you updated with all the developments as they come. Now it's over to you, of course. Did organized labor cut the right deal? 70,000 naira new minimum wage, or 250,000 naira as previously demanded, that would have come with higher petrol prices. The poll is up. Let's get your pulse on this conversation at Nairmetrics on X. Up next, we're going to get into the African markets. Let's go. Looking at the African markets, of course, there's a mixed performance there. The NSE, Nairobi Stock Exchange, continued its decline in the wake of calls for the president's resignation. So we can see that here, JSE down, for the record, and we know that the president gave a speech earlier today. Casablanca up, Egypt up, Nairobi Stock Exchange down as well. But that's the show for today and the week. We know that this is a Friday edition. What a run it has been this week on Market Pulse. So much to talk about. But we'll kick off next week, of course, with a focus on CBN's MPC decision. Will they hold rates, cuts, or hike them? We'll also look out for how President Ruto quells tensions in Kenya with calls for his resignation rising, and of course, market reactions to that. Here's to a weekend enjoying some, not all, of the profits made from well-informed financial decisions during the week. Make it a date with with me on Monday and every weekday at 4 p.m. West African time for Market Pulse here on News Central in partnership with Nairmetrics. I'm leaving you with global markets and, of course, feeling the impact of the Microsoft shutdown.